You hear about tariffs and trade wars in the headlines all the time, right? But what does that actually mean for a real company trying to do business? Well, today we're going to do something a little different. We are going to dive headfirst into one company's earnings report to see the real-world ripple effects of these huge global economic shifts. All right, let's kick things off with this quote from the company's own management, because this is the key to the whole thing. It's this idea of the ripple effect. It's not just about who you sell to directly. It's about who your customers sell to and who their customers sell to. That's where the real impact hides. So, first, let's really set the stage. The main challenge this company is facing is, well, it's a global storm of uncertainty. And at the heart of that storm is what's called tariff uncertainty. It's pretty simple. When businesses don't know what new taxes are coming down the pipeline, they get nervous. And what do nervous customers do? They hit the pause button. They delay orders. They don't stock up on inventory. This whole effect is called demand deferment, and it's a huge headwind for any supplier. Now, you might look at this chart and think, okay, so what's the big deal? Only 7% of their sales go directly to the US. That seems pretty small. You'd think they're mostly insulated from any American tariffs, wouldn't you? Well, this is where that whole story gets really, really interesting. That 7% number, it's honestly kind of misleading. Because of that ripple effect we just talked about, the real impact is felt way beyond that direct 7%. It becomes a global chain reaction. Okay, so we've got this storm of uncertainty. Cautious customers, you'd expect their performance to take a hit, right? Let's take a look at how they're actually doing, because the results might surprise you. So even with all those headwinds, just look at these numbers compared to last year. Revenue is up, their gross margin actually got better, and most importantly, their profit after tax is up almost 6%. I mean, that is some serious resilience. And this number right here, it just perfectly illustrates their strength. In a market where a lot of companies would be thrilled just to stay flat, these guys managed to grow the bottom line. So how on earth did they pull that off? Well, a huge piece of the puzzle is good old-fashioned discipline. They focused on what they could actually control, their own internal processes. And by doing that, they managed to bring down their manufacturing costs relative to sales. It's smart, fundamental business. Now, to really get what they're doing, we have to split their business into two parts. See, they have two main chemical divisions, and their strategy for each one in this tariff mess is completely different. It's fascinating. And this is where their strategy gets super smart. On the Chromium side, they're playing defense. They're diversifying away from risky industries and just holding the line. But on the Barium side, they're all out on offense. Why? Because their Barium products aren't subject to US tariffs. So all that uncertainty that's a problem for everyone else, for them, it becomes a golden opportunity to swoop in and grab market share. But they're not just managing the here and now. With their finances looking solid, the company is making a really bold bet on the future. And it's a potential game changer called Strontium. And listen, this isn't some far-off dream on a PowerPoint slide. It's happening as we speak. They've already put serious money into it, and you can see the timeline laid out right here. Trial runs are just around the corner, and full-on commercial production is slated to start right after that. So why does this matter so much? Okay, first off, they're going to be the only company in India making this stuff. Second, it's a key ingredient for magnets and a much cheaper option than rare earth minerals. And third, and this is the kicker, a huge global competitor just got wiped off the map, creating this massive supply gap, a gap they are perfectly positioned to fill. This could be a massive engine for growth. This quote from management just says it all, doesn't it? They're not looking at a global market disruption as a problem. They see it as a clear, straightforward business opportunity just waiting for them. Now, a big growth plan like this is great, but it needs a solid foundation to stand on. So to support everything they're doing, both now and with the new Strontium project, they're also working to make their whole operation way more self-sufficient. They're doing this with a strategy called backward integration. I know, it's a fancy business term, but the idea is actually super simple. Instead of buying your key ingredients from somebody else, why not just own the source? In their case, that means literally buying the mines that produce their raw materials. It gives them total control over their supply and their costs. And again, this is not just talk, it's action. They've already signed the deal for a critical chrome ore mine. Right now, they're just working through the paperwork, and they expect to have it all finalized by the end of the year. This is a serious, long-term play for stability. Okay, so we've looked at the challenges, their current performance, their future projects. Let's put all the pieces together.
what's the big picture takeaway here? So you might be asking, how can they afford to make all these big, bold moves? Where's the money coming from? Well, a lot of it comes down to this one number right here. Their net debt to equity ratio is just 0.25x, which is incredibly low. Put simply, their financial house is in order. They have a super healthy balance sheet, which gives them the firepower to invest in growth without taking on a bunch of risky debt.
So to wrap it all up, this isn't a company that's just hoping to survive the storm. They're actively navigating through it. They're using this really nimble, flexible strategy, playing defense when they need to, but going on aggressive offense the moment they spot an opening. And all the while, they're making these smart, long-term investments to secure their future. Which really leaves us with one final thought, doesn't it? This company's story seems to suggest that in a really chaotic global economy, maybe the safest thing to do isn't to just pull back and wait for things to calm down. Maybe the best defense is a well-planned, bold offense.